Hello, everyone. Welcome back to the Blockware podcast. This week, we have a massive episode. Bitcoin is pumping, and who better to talk to than Caleb Franzen? Caleb, one of the smartest analysts on X, constantly putting out high signal. Caleb, welcome to the show.
Dude, thanks for having me. I don't know about all that, but we're going to try to live up to some of the expectations today and bring some alpha to everybody. Obviously, it feels great seeing Bitcoin push back above 122 today. So hopefully we have some more wins in our sails, so to speak,
Yeah, I think so. So normally before I start recording, we'll talk, but you put out recently that you have the podcast itch and you want to get on and talk to someone ASAP. So I kind of just want to give you the floor. Like, what's on your mind? What are you thinking about with markets right now?
Dude, I think one of the amazing things about the markets right now, and you kind of hit the nail on the head. We just started recording like 30 seconds after I got in the room here to get going, so I love the energy. We're in a bull market. And one of the things that I learned a long time ago is there's no better time to be bullish than during a bull market. This is when we have an opportunity as investors to have the wind in our sails, right? And we want to take advantage of this market's momentum as much as possible. And I think one of the funniest things about this current environment, obviously we've gone on a little bit of a run here from 108,000 to 122. But as of today, Bitcoin's up almost exactly 100% year over year. And so many investors got so scared at the opportunity to produce yet another higher low, right? And if we think about markets, I'm a technician by training and an economist, but from an investing side of things, I only focus on basically the TA, right? What's the price action? What are the statistical indicators, so on and so forth? And what is an uptrend? An uptrend is just the sustained production of higher highs and higher lows. So if you get scared at every opportunity to produce a higher low, by definition, you're probably going to miss out on 50% of an uptrend. And that's a great way to underperform. And I don't know about everybody else. I'm not trying to underperform, right? So I like to keep things very simple. Another phrase I use very often is embrace nuance. But at the same time, I think it's also very important to just keep things simple. We don't want to be our own worst enemy during a bull market and during an uptrend. Eventually, this trend is going to change. It's not my job as an investor who's focused on making money to predict when that's going to be, because the bulk of the money is made during the period of the trend. And objectively right here, right now, whether we're talking about equities, whether we're talking about Bitcoin, whether we're even talking about gold, right? We are in very strong uptrends across the board.
Yeah, I really like that framework. And you've been, honestly, as long as I've been following you on X, which is a couple years now, you've been repeating the same message, which is don't be bearish during a bull market. It's honestly pretty simple. And a lot of investors, they think they're smarter than the market. This is the top right now. Like, this is where things, it's all over now. But you've been pretty consistent on, hey, don't resist these trends. Like, don't think you're smarter than the market. Just if it's a bull market, ride with it and embrace the volatility.
Sure. And look, there have been periods during the course of this bull market where the trend has objectively deteriorated, right? So one of the things I think is really important is we have to be adaptable and flexible based on data. It's not just a vibe. I'm not looking at where the phase of the moon is or what day of the month it is, right? What comes down to our practice as investors is actually studying the technical analysis, actually looking at the trend. So there have been periods where I've recognized, hey, it's a good idea to be very defensive here or cautious. But as soon as we get back above certain moving averages, as soon as we have certain Williams % R oscillator signals triggering, I want to be taking advantage of those opportunities as much as possible. And during an uptrend, that means being long.
Right. Is there anything you're specifically keeping an eye out for other than price action to kind of signal maybe, hey, the trend is reversing here? Do you hate taxes and love Bitcoin? Well, do I have the product for you? New guidelines from the Big Beautiful Bill allow for Bitcoin miners to depreciate 100% of their hardware costs in year one. That means every dollar you spend on Bitcoin mining hardware, you can write off instantly. If you have $100,000 in income you want to offset, you can purchase $100,000 of Bitcoin mining hardware and offset it. Blockware makes Bitcoin mining accessible to everyone. You could purchase a Bitcoin miner hosted at one of our data centers, and we will operate it for you. You get to acquire Bitcoin every single day at a discount to the market price, while also receiving major tax benefits. For more information, click the link in the description or go to mining.blockwaresolutions.com/tax. Again, that's mining.blockwaresolutions.com/tax.
No, because by definition, if I'm going to be talking about a reversal of the trend, it's going to all come down to price, right? I think this is one of the mistakes that, and I'm an economist by training as well. That's why I got my undergraduate degree in from UC Santa Barbara. A lot of big brain investors have overthought this macro environment, and all we really needed to do was just focus on price, right? So even in Q1 of this year, when I was a little bit cautious, none of that had to do with tariffs or a recession is on the horizon or the Fed isn't going to cut rates yet. It all came down to a deterioration in price structure. And as soon as that price structure improved, that was around 87,000 for Bitcoin. I said, max long, full bullish again. It was really that simple. And at no point did I ever sell any Bitcoin. And in fact, I was just stacking, but just at a very patient and selective pace. So that's what it really comes down to. Price is king.
Yeah, that makes sense. I mean, it really is the ultimate signal. You can have all these narratives you want, but price tells you what the market thinks in this very exact moment. Like, now, are you trading? I want to get a little more insight into, because for me, I just accumulate Bitcoin. That's pretty much the only thing I accumulate every single day. Are you trying to trade these signals? Like, what's your objective as an investor?
What these signals tell me is when to be a little bit more aggressive and when to time some purchases. I'm certainly not looking at this point of the cycle to reduce any Bitcoin exposure. So for me, right, the last time I bought Bitcoin was in March of this year when we were trading right around 79,000. That was based on a specific signal that I was looking at with the Williams %R oscillator. That signal didn't trigger again until the end of August and early September, which is why my only other purchase since March was at the end of August and early September, right? And so those purchases were anywhere between 108,000 and 112. And I was willing to stack Bitcoin again at those prices. But look, I had to be very patient for basically 6 months to just basically sit on my hands, enjoy the upward momentum in price. I've been trading a hell of a lot less over the last few years because my general thesis has been, let's just take advantage of this bull market by minimizing our effort and maximizing our opportunity on the back end. There have been a lot of investors who have made way more money than me this bull market, right? I want to be very clear about that. But also there's been a lot of investors who have tried to do way too much. They've been their own worst enemy. They're moving so far out onto the risk spectrum, trading altcoins with 95% of their portfolio size, and they're not keeping up with Bitcoin. That's one of the reasons why sentiment is in the garbage as much as it is, despite the fact, like I said, Bitcoin's up 100% year over year.
Yeah, it is really interesting. Bitcoin went up 150% in 23, 120% in 24. It's up 30% this year. And it feels like a bear market based on just purely X sentiment. That's how you know people are not long Bitcoin.
Worst bull market ever, right? I mean, come on.
Yeah, compounding 100% CAGR. So terrible. I want a little more perspective on your background. Like, I loosely know it, but where you're at now, you're an independent analyst. You put out great signal on X. How did you even get into financial markets and Bitcoin?
Oof, yeah, this is a huge question. So let me just start by saying I quit my banking job in 2020 to start Cubic Analytics and basically just start investing and sharing analysis full time. But before that, like I mentioned, I was working in banking up in San Francisco. I was a commercial portfolio analyst. So I was helping to manage a loan book of about $30 billion for a commercial bank in San Francisco. But they were really operating worldwide and nationwide around the United States. And, that was an interesting job, but it certainly was not aligned with how I wanted to spend my day, right? I'm a market junkie. I love investing. I love talking about the Fed, so on and so forth. I don't want to analyze delinquencies and our commercial loan book, right? That for me was not super exciting, I hate to admit. Before that, I also worked in wealth management. So I did a short stint at Merrill Lynch with some guys in Santa Barbara who were managing a pretty notable and sizable book for wealth management. And, I really liked that kind of background. For me, in college, I always planned to go down the wealth management route because to me, it kind of seemed like the honorable profession. I still think it is. I was just a little bit too bored in that role. It came down to a lot of interpersonal relationships, which I think is great. And you're obviously helping people accomplish a lot of their financial goals and basically being their doctor for their financial portfolio, which is beautiful. But I felt like at that time in my life, I wanted to kind of grind my teeth a little bit more and really kind of go down the analyst route. I used to be a huge Bitcoin skeptic, not advocate, the opposite of an advocate, just a huge critic, right? And that I think largely has to do with my following of Peter Schiff back in the day, who was huge for me in terms of growing my knowledge of economics, but terrible for me as a source of investment advice, so to speak. And not that he gives investment advice, but I think it kind of just goes back to the basic principle that the stock market is not the economy. And if we're going to focus only on the negatives, we're always going to find reasons to be out of the market. And the fact of the matter is, regardless of what kind of macroeconomic environment we're in, there's always fundamental risks. And that's something that I had to learn a long time ago. And fundamentally, I kind of come from that Austrian economic background in terms of approaching monetary policy, overall macro conditions, so on and so forth. And so for me, I fundamentally understood that there was an issue with the fiat money system, but I just viewed gold as the answer. And in a lot of ways, gold is the answer. But for me, at that point in my life, I just could not wrap my mind around Bitcoin. And then COVID happened, 2020 happened. I remember vividly, I had a friend call me and say, because I was calling everybody at the time, telling them buy stocks. And I had a friend call me and he was like, hey man, you're going to hate me for this, but I just bought Bitcoin. And I was like, you know what? I kind of actually love that. And it was trading at like 4,000. This was like basically the lows of price. And I was like, you know what? I actually kind of love that. And so I started buying that, shortly thereafter and haven't looked back since.
That's epic. Yeah. I did not know you were a Schiff gold bug type of guy. That's very interesting.
I was a huge doomer. I thought the United States was going to default on its debt. I thought the economy was going to collapse. I thought the US dollar was going to collapse. I thought the stock market was going to collapse. It was like all doom and gloom for me at a young age.
Okay, so let's get into that. What changed your mind? Because to me, I was kind of a doom and gloom guy when I got into Bitcoin too. And I guess I realized the can be kicked longer than I initially expected. After COVID, I was like, oh, we're going to have hyperinflation for sure. They just printed all this, Weimar Germany, here we come in the next 5 years.
Right.
Obviously hasn't happened yet. So what got you out of that doom and gloom mindset?
So I fully believed and still believe today that Peter Schiff's perspective on this was correct, which is that the Fed is going to, he called it QE infinity, right? So we're checking into monetary Roach Motel was the key phrase that he used to say when I was listening to him back in the day. And so at the time, my impression of that was the same as his conclusion, which is we're going to experience hyperinflation in the United States. The value of the dollar is going to collapse. We're going to go through the Weimar Republic kind of era, right? So on and so forth. And the big turning point for me was recognizing that all of that QE largely was staying within the financial system. And absent an increase in credit growth or loans and leases in bank credit, which oddly enough we are experiencing today, that higher inflation might not actually come. And instead, what's actually going to take place, especially if that QE stimulus is largely going to stay in the financial system, that what's going to take place is we're only going to see inflation in terms of asset prices. So instead of thinking that, oh my God, we're going to experience hyperinflation, therefore the stock market is going to crash and gold is going to go up, instead it was all dollar denominated assets are likely going to rise over time due to the fact that the Federal Reserve and central banks worldwide need to print money. They need to conduct QE. They need to suppress interest rates artificially. And at the time also, right, we were seeing a lot of central banks around the world have negative interest rates, And I remember going to professors at the time, talking to them saying, I think one day the United States is going to have negative interest rates. And look, we're certainly not there yet. And they would laugh and kind of like scoff at that remark. And, I still fundamentally believe that that's going to come in the US probably within the next 20 years, right? It's a long-term kind of overall outlook. Maybe it's going to be sooner though. So I just kind of had to fundamentally recognize if QE infinity is here to stay, then I need to buy stocks. I need to buy Bitcoin. I need to buy dollar denominated assets because the value of my purchasing power is just going to go down over time if I'm just going to save US dollars. So instead of worrying constantly about the next market collapse, I need to recognize that all of this excess in terms of monetary and even fiscal stimulus is largely just going to prop up financial markets.
Yeah, that makes sense. Asset inflation rather than consumer price goods inflation. And I mean, I would say that's happening right now because the equity markets are making all-time highs. That's risk on. But then gold, the safe haven asset, is also making all-time highs, up 40% this year. Would you agree? Is this kind of like the melt up thesis?
I'm not here to say it's a melt up because as I look at equities, I think that the fundamentals are there to support this rally. We have forward 12-month earnings for the S&P 500 at all-time highs. We still have a very resilient and dynamic labor market, even though it is softening. It's objectively softening, but it's still categorized, in my opinion, as resilient and dynamic when we have something like prime age unemployment at 3.8%. It's a very strong number, actually. And, the economy is growing at a real rate of 3.8% annualized. Q3 expectations are coming in at 3.9%. There's all of these things that are here to support an ongoing uptrend. And then when we actually consider the fact that we do have M2 growing at like 4.8% year over year and accelerating, that rate of growth is accelerating to the upside. We also have something like loans and leases and bank credit on the rise as well, right? So banks are extending their balance sheet. Consumers and corporations still have a tremendous amount of appetite for new loans. And so in that environment, it looks like risk assets are going to continue to trend higher, right? Then, not even just risk assets, because gold is doing the exact same thing, right? So this is a broad-based uptrend in dollar-denominated assets, right? And it comes down to that basic fundamental thesis.
Yeah, that makes sense. And so the quote-unquote 4-year cycle, people would say, despite all of the bullish indicators in the market right now and the positive uptrend, 2026 has to be red because Bitcoin has gone green, 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 red since its inception. Would you agree or disagree that, the 4-year cycle is still a thing?
I think in the past, the 4-year cycle has been the most effective and simple way to quote unquote time the market, right? Just expecting that up, 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 down, as you so eloquently put it, is going to be the pattern that repeats again. And I'm not here to say that this time is different, but I will say, I think if you look at the average timeline of a Bitcoin bull market, we tend to peak around 16 to 17 months after the halving. And so that peak would have been in August of this year. So if someone does believe in the halving cycle, I think it's appropriate to use how many months on average has Bitcoin peaked after the halving, and that number is 16, which means that we peaked back in August. So if you believe in the 4-year halving cycle, you need to be selling all your Bitcoin and shorting it if you think that cycle is going to repeat. I just don't happen to think that way because, again, it's not my job. By the way, I was bullish at the top in 2021, right? And part of my investing strategy is to be bullish at the top and bearish at bottoms because that is the very nature of trend following. I am not trying to time the tops and snipe the bottoms. I'm trying to follow trends here, right? And so from that standpoint, I'm looking at the economy, I'm looking at the stock market, I'm looking at Bitcoin, I'm looking at the weight of the evidence and all of these different dynamics. I'm looking at 2026. I'm saying, okay, maybe it's not going to be as strong of a bull market as we had in 2023, 2024, and what we've already experienced in 2025. But why can't it still be an uptrend with a production of higher highs and higher lows? And so that's my general expectation right now is we're going to continue to stay in an uptrend by the very evidence that we have a resilient and dynamic macroeconomic environment. We have forward earnings on the rise. We have risk on metrics continuing to accelerate. I mean, what's not to like?
Yeah, I agree. You've talked a lot about Powell being the GOAT. And I think Trump would disagree. Obviously, he's been kind of jawboning at him all year long. A lot of people think Powell is going to be out next year. Why do you think Powell's the GOAT? And, do you agree that, he should be cutting rates right now? Because a lot of people are like, he should have been cutting rates all year.
I don't know if he should have been cutting rates all year because for the majority of this year, inflation has been accelerating and we're still above their 2% target, right? So in a lot of ways, it does seem like the Fed is kind of thrown in the towel, or at the very least, they are more concerned about the risks to the labor market today than they are about inflation dynamics. For me, I think there's a really good case that Powell is probably the greatest central banker of all time, officially kind of overpassing Paul Volcker now. The reason why is Powell was kind of the head of the Fed coming in during the first time we were raising interest rates. I mean, Janet Yellen was the first to raise interest rates after QE and after the great financial crisis. But that continued under Powell, at which point he actually started to cut interest rates. Then he had to respond to the COVID crisis, slash them back down to zero. Of course, the Fed has made mistakes under Powell's leadership, right? The whole transitory dynamics, even in the moment, felt like a bit of a joke. And then we went through the greatest inflationary spike in modern financial history, which required Powell and the Fed to admit their mistakes and embark on the fastest and largest tightening cycle in modern financial history. And I think the willingness to adapt and change and not necessarily admit mistakes, but at least admit mistakes inherently within their policy shift has been really bold, right? And, they've done a really excellent job, in my opinion, of pausing rate hikes for an extensive period before cutting. Then after cutting for 3 or 4 months, pausing again for basically the entirety of 2025, right? They cut in December of 2024. Now they're cutting for the first time in September of 2025. And, the Fed seems to be following through on what they continue to preach, which is that they're going to be a data-driven approach on monetary policy. And sometimes data is hard to read. Sometimes data is hard to forecast. So, the Fed is not some all-knowing institution. They're not infallible, or maybe they are infallible. I'm not sure exactly what that word is. Anyways, so I do think Powell's done a really excellent job. And, my mom has said this quote to me for a really long time, which is, don't let perfect be the enemy of good. Has Powell been perfect? Has this Federal Reserve been perfect? No, but I think they've been damn good.
Yeah, I agree. And infallible does mean perfect. So you used it in the correct way. They are not infallible. But I totally agree. He got handed kind of a terrible set of cards and he played them pretty well. I was pretty certain that hiking rates from 0 up to 5% would cause a recession and it didn't. Like the
Yeah.
economy held pretty strong. He had to do it. Inflation was as high as it was. I think, it's unfortunate for his legacy that all the money printing memes are going to be pretty much what he's remembered for. But I think it's a winless job. I wouldn't want to be the Fed chair, but I think he did it about as well as anyone could.
Yeah, I think so too. And maybe those memes are going to be good for his legacy. We'll see.
Yeah, it could end up being the case. What
Yeah.
are your expectations for the future Fed chairman? Do you think QE is going to come back in 2026?
Basically this whole interview process for the next Fed chairman is going to come down to the ridiculousness of who's committed to the biggest amount of rate cuts in the shortest amount of time. So, we're already seeing some language out of a variety of existing officials and people who are rumored to be in the running for the position, talking about slashing interest rates very aggressively. There's a quote, and I can't remember who it was from, and I don't want to botch it, but I think they were saying that interest rates are like 250 basis points above the neutral rate. And it was like, my God, like that's, what are we talking about here? Like the economy is growing at 3.8%. I don't think we need 250 basis points worth of cuts right now. But hey, some people everyone has their approach, so I'm not gonna criticize too much. So, I don't know what the expectations really are. I think Powell's done an excellent job. I would love to see him, basically stay in that position, but that obviously does not look like it's going to be the case. So, I'll go into the next Fed chair with an open mind and basically hope for the best, right? But I think as a long-term investor, in a way, it's sad, but we need to, in a way, be excited or happy about the fact that the next chair is likely to be coming in with an easing mindset. We know that for a fact. And for those of us who own assets, that's going to be a huge tailwind that we have in our backs. And so I think this is like a really amazing opportunity for a lot of investors to recognize some of the basic things that we talked about earlier with QE and the artificial suppression of interest rates and who that rewards. And it rewards the owners of assets. And so if you have the ability to own assets, you must, right? I mean, look at a chart of the S&P 500, look at a chart of Bitcoin. By the very definition of those assets trading at all-time highs, if you've ever sold assets, that was probably a mistake, right? Because they keep going up over time. And so we're going to go through ebbs and flows. We're going to have bear markets. We're going to have recessions. But historically, what those are buying opportunities. 10% corrections at the index level for the S&P 500, buying opportunities. Those 20 to 30% corrections for the price of Bitcoin, huge buying opportunities, right? So that is our opportunity now as investors to recognize the system that we're in, not necessarily try to fight it, but try to align with it as much as possible and help out as many people as we possibly can.
Yeah. Do you feel almost like a moral obligation to educate people to just simply hold assets? Because you engaged with a tweet of mine earlier this week, kind of talking about, now's the best time to be a young, ambitious person because you can save in Bitcoin, you can use AI to learn, you can connect people over the internet. And some people do that, but a lot of people our age, they don't save in assets. They don't accumulate Bitcoin. They're not using AI. And so those people, that don't own assets, they're going to get fleeced over the next couple of decades as prices continue to rise. So do you feel almost like this is a moral imperative to educate as many Zoomers as possible to just hold assets?
Yeah, it really is, and I think it's super important. It's, and I didn't come from means by any sense of the imagination, coming from a single mother household. My mom was getting her PhD in biochemistry while she was raising me as a single mom. So, I came from basically nothing. And I started my investing journey after selling my car in college because I no longer needed it. And I took the capital and I started to invest, So I think from that standpoint, one of the key messages I've shared for a really long time is whether it's $50 a month, $500 a month, or $5,000 a month, which for a lot of people is a lot of money, you need to allocate that money into the markets. If you're employed, you need to be taking advantage of 401ks and employer matches, so on and so forth. And especially in this environment where we have the Bitcoin ETFs, right? I'm a huge advocate and proponent to have Bitcoin in cold storage, not your keys, not your coins. But hey, if the U.S. government is going to tell me that they're going to give me a tax advantage way to get access to Bitcoin, I'm going to take advantage of that as much as possible. And so, that it really is the key theme is that the way to protect your purchasing power over the long run is going to be to own assets. And when those assets go on sale, it's our responsibility to our future selves. It's our obligation to our future selves to take advantage of those opportunities when they do come.
Dude, that's epic. I did not know you started your investing career by selling your car. That's a baller move.
Shout out to my 1974 Chevy Nova, man. That thing was a beauty, and I was sad to let it go, but it started my next phase of life, so it served its purpose.
Yeah, that's a bold move. One of the things I've been thinking about a lot this year is pretty much every action out of the Trump administration, to me, signals that they know the government has a huge solvency problem. They started off, the very first thing was Doge. We're going to cut spending. We're going to get rid of all the waste. Didn't really work. You had the tariffs is like, hey, we need to generate revenue. You got the big, beautiful bill trying to stimulate growth in the economy. And of course, you've had Trump jawboning Powell all year long to lower rates. So to me, all of that is like, hey, they want to immediate cash grab. They want to stimulate growth, and they want to lower interest rates to service the debt better. Would you agree with that thesis? Like, are they, secretly, whether they say it or not, just really, really concerned with the solvency of the U.S. government?
I don't know if they're concerned about the solvency of the U.S. government, right? I think politics and the government in general, it's all about just kicking the can down the road, right? So how do we defer this problem onto the people who come in after us? We do have a solvency problem in the U.S., but it's realistically not something to be concerned about in the short or medium term. And the medium term could be 10 years, right? When we're talking about a country and, overall cycles, so on and so forth. I think that it's been unequivocally clear. I mean, one of the phrases that Besant and Trump have basically said is run it hot, right? And, I think even this morning, Trump came out and said that we can grow our way out of this debt problem. Now they're floating ideas of $1,000 to $2,000 stimulus checks from tariff revenue. So, they're repeating a lot of very similar playbooks to 2020, all of the fiscal deficits, so on and so forth. So this is the playbook. They're going to try to incur as much growth as possible. By the way, I mean, no government, no political class is going to come in and say our goal here is to slow down the economy, right? I mean, that might be what the Fed was trying to do in 2022 and 2023, but they don't have voters to pitch themselves to, right? So the political class, which is different than the Fed, do have that kind of incentive structure, which means that they're just going to try to grow and run it hot as much as possible and give people handouts. That's basically the way government incentive structures work. And so from that standpoint, of course, that's going to be the environment that we're in, right? Then as much as possible, that's what they're going to try to incur. And so, I'm hopeful in a way that they're able to achieve that, because I'm certainly not hoping for a recession in the United States, even though I don't live in the US anymore. But, I just keep coming back to the very simple fact, like, we're in a bull market and the economy is growing. The unemployment rate, it has been rising. Some delinquencies, some defaults are on the rise. Yes. But again, those things do happen. And if we can go through that, because this is something that's really important for people to understand, not every slowdown produces a contraction, right? So we've gone through some of this slowdown more recently, particularly in the labor market. Just because that slowdown has happened does not necessarily mean it's going to continue in the trend of deterioration. It could reverse, right? And so if the federal government is talking about running it hot, growing us out of the debt problem, they're going to do everything that they can to prevent that, So it's basically party on, right? The music's playing, we have to dance.
Yeah. I mean, that's literally code for inflation higher than interest rates. They're going to run it hot. You got to listen to what they're saying. Do you think AI is going to lead to more, no, not the labor market is deteriorating yet, but a further slowdown because I've seen some stats where like recent college graduates have the lowest unemployment rate since like 2008 or something, and it's on par with non-college graduates. Do you think AI is going to kind of push that trend further?
Yes, it will. There was a study that came out of Stanford, I think it was earlier this year, back in August, and they were talking about that same exact kind of dynamic, how AI is going to make it basically push up low-skilled unemployment. And so from that standpoint, college graduates are certainly not low-skilled labor, but from the perspective of being competitive, because one of the things that you learn in basic economics is that labor and capital are both complementary and competitive types of economic dynamics, right? Labor can work with capital in order to be more effective, but also capital can outcompete labor for jobs, right? This is why McDonald's and a variety of different fast food joints have robotic checkout, right? I mean, you can just go to the machine yourself and put in what you want to order. That's a competitive dynamic versus labor. And so we're seeing that growth in that trajectory in the labor markets today being outcompeted in a lot of ways by artificial intelligence. So I'm not a technologist. I'm not able to actually identify how significant of a challenge that's really going to be, but fundamentally it does make sense. And I'll just kind of default to what some of these other really smart people are talking about, like folks at the University of Stanford, who are saying that this has a real effect here. And, I think that's where there's a lot of confusion about things that are taking place in the labor market right now. And typically focusing on the cohort of people between age 16 and 24 is not going to be a very emblematic representation of what the actual labor market is doing. These are folks who, kids really, who are more often than not either have dropped out of school or are working while they're in school. They are not necessarily the best representation of the health of the labor market. And this is where, I referenced it earlier, but I think it's really important to look at something like prime age unemployment. And right now that's at 3.8% and still historically low.
Yeah, that's interesting. So you would say the TikToks of the Zoomers like crying in their cars not indicative of the broader scope of the economy?
No, that's probably a signal to fade more so than anything else.
Yeah, it is interesting though. I'm not concerned with AI. I'm concerned for the people that aren't leveraging it, because I find myself, I'm curious how your setup is as an analyst. I use it almost religiously now. It's like I always have a GPT tab open. I'm able to bounce ideas off it, scrape data, do all sorts of amazing things, really increase my personal productivity. For the people out there that aren't using it, I am concerned they will fall behind. How much do you actually use this technology to amplify your research?
I'll do it for some reports, but they're few and far between. So if I'm trying to get a lot of financial data in a very short amount of time across a wide breadth of different companies, I'm definitely going to lean into that, because the work that used to take me several hours to complete can now be done in 5 minutes after creating an effective prompt after another 5 minutes. So, I think that's fantastic. I've noticed for me though, I am not using it too often. So I might need to pick your brain on some stuff and figure out how I could be optimizing that a little bit better, because, AI is definitely smarter than me, but in terms of using it right here, right now, to look at the economic data that I'm looking at the market trends that I'm seeing, it's hard for me to convert that into usable prompts and conclusions when I generally feel enough like I know what the conclusions are, if that makes sense. And I do feel a little bit of a fire under my ass, especially lately, like exactly like what you said. If I'm not using this, at some point I'm going to fall behind. So I need to be implementing it more and more in my day-to-day basis. And I'm not doing that yet. So I'm going to take this as a challenge, Mitch. I got to get better at that.
Yeah. So for me, what kind of pushed me over the edge was Saylor recently said that he used AI to come up with their preferred equity structure.
Oh yeah. Right.
And he kind of flexed that. I'm like, well, I used to almost take pride in like, yeah, I don't need AI. I could do it without it. But that would be like, in the early 2000s, running a newspaper company. I don't need the internet. Like that same exact mentality where it's like, we should be using all of the available tools to, the maximum capacity and be like, yeah, doesn't mean, we're intelligent. We can't think for ourselves by not using AI. It's just like, let's use this to amplify what we are already capable of.
Yeah, I think that's a great point. So like I said, I'm going to take that as a challenge, Mitch. I'm going to implement it myself, brother.
Yeah, it's like having, the world's smartest professor and he's always available 24/7. So, yeah, I will
I shouldn't be using it to craft text messages to my exes or anything like that.
No, definitely. Yeah, that's not and don't make it your girlfriend either. I've seen where that's become crazy. The new thing. Some of these like dating apps they're trying to monetize now. It's they had the anyways, now they're offering like artificial girlfriends to these people. It's crazy stuff, two different worlds with AI, I swear.
Yeah, it's wild.
So you put out a tweet recently. I found this very interesting from you because I've always thought of you as like the least biased analyst I've ever encountered. Like you always seem very objective, focused on the price. But I'll read your tweet back to you. You said, "There is nothing wrong with having a bias. In fact, the majority of my work revolves around developing a bias based on data and then using that data to make better decisions. As investors, we must develop a bias. It's how we arrive at that bias, which is important." So what is your bias and how did you arrive at it?
So what I'm trying to talk about there is investors inherently need to take risk. If we're going to think about macro, if we're going to think about different dynamics taking place with the Fed or in the stock market or with Bitcoin or with gold or with geopolitics, The reason why we're hopefully doing that is so that we can make better decisions as investors. And so we must create a bias, but it's how we create that bias based on objective truth, objective data, statistical indicators, price action, so on and so forth. That's what's really important. So that was kind of the point that I was trying to hammer home. And I'm really glad you brought that one up because I do think it's really important. I try to be as objective as possible, but I must have a bias if I can't be an investor if I don't have a bias. If I don't have a bias and I'm an investor, I have no position because having a position means having a bias. I'm either optimistic or pessimistic over X time frame. That is a bias, right? And I have to put my capital at risk in order to exercise that bias. So, I hope that makes a lot of sense, right?
No, that does make sense. And I mean, even like not having a position, holding cash is a position, and that's a bias
sure.
in of itself too.
Right. Yeah, exactly. That's a great point as well. And so the key kind of point there was, how do we create our bias? Am I going to create my bias because it makes me feel better and sleep better at night? That's probably not a better way to be an investor. Or am I going to create a bias based on truth, based on data, based on the actual reality that we're living in? It goes back to how I used to feel before. I used to feel like the US was going to default on its debt and that the dollar was going to collapse and that the S&P 500 was going to tank and crater to zero, right? I had no there were some fundamentals to justify that, but at the same time, it was totally detached from the reality that we were actually living in. So am I going to bury my head in the sand and just focus on the data that basically validates my bias? Or am I going to be objective and adaptable, looking at as much data and evidence as I possibly can and saying, based on this, what is the most likely path for the future? And again, I think a lot of people, and maybe I'm just thinking of myself at a younger age, but we look at the world and we think it should be this way. And therefore, because it's not this way today, I'm pessimistic, right? And I don't think that's the best way to be an investor, right? Because again, if that was the frame of mind that I continue to operate under as an investor, I never would have bought stocks. I never would have bought Bitcoin, right? I would have just continued to believe that everything was a bubble, everything was going to crash, so on and so forth. And I would have missed out on all this tremendous upside. So, I think that's really important. We must create a bias. It's how we create that bias that's really significant.
That is very interesting. You don't want to invest on base how you think the world should be. You want to invest on how you think it actually is. I'm just trying to put myself in like my shoes from a year ago, because I feel like I may have fallen victim to this, because I remember you specifically were pretty bullish on Palantir stock. I feel like a year ago, maybe correct me if I'm wrong.
A long time.
And, yeah. And in my mind, I didn't necessarily fade it, but I never got on the Palantir train, because in my mind, I'm like, we should not have this company that has all the spy software and can spy on its citizens. I missed out on great returns by kind of, investing or lack thereof and investing in that based on how I thought the world should be.
Sure. I mean, look, a lot of investors approach the market from kind of a point of ethics or morals, right? And I think that's totally fine. I'm just not that way. I'm here to make returns, right? I'm trying to improve my standard of living, my future standard of living, my family, so on and so forth. And so from that standpoint, right, Palantir has a lot of problems. I've owned the stock for a very long time. I bought it the day it IPO'd, actually, and I continue to buy it in 2022, 2023, even in 2024. The last time I bought the stock was at like $21 a share. I think today it's trading right around 180. And so it's my largest individual stock position that I've owned for a very long time. And even by cost basis, it's been my largest as well. So the cost basis was huge and it's grown even huger, right? So that's the reality of the situation. And again, it also comes back to if we're actually going to pay attention to the world around us for the sake of hopefully being a better investor, it comes down to our goals. It comes down to our individual styles, right? We could disagree fundamentally. I mean, I know a lot of investors who won't buy tobacco stocks. That's totally fine. I don't own them either. But I know a lot of other investors who are looking for that dividend yield and saying, hey, I think that these consumer staple stocks are going to do really well. Their consumers are addicted to tobacco, and this is going to continue to do really well. So I'm going to put my money there because I'm a capitalist, essentially, right? So, that's basically what it comes down to.
Yeah. I mean, you're going to have a bias regardless. It's like whatever your position is, of course, you're going to be biased towards your position doing well. So it's, how do you get to that? I think that was a great tweet, and it's, I appreciate being able to hear you unpack it a little bit more.
it's also important to challenge your bias, right? I mean, that's why I look at data every single day, because I'm trying to say, is my upward bias, is my expectation that asset prices are going to continue to be in uptrends, is that at risk based on the weight of the evidence that I'm looking at today? Am I seeing bad signs in credit spreads? The answer is no. Am I seeing bad signs in terms of volatility? The answer is no. Am I seeing bad signs in terms of relationships with different moving averages? The answer is no. Okay, until that does change, then I'm going to continue to have a very strong upward bias.
Yeah. One thing I want to pick your brain on is Bitcoin treasury companies. I'm not sure how much I've seen you post about them. What are your thoughts on these kind of in the aggregate? We can pick on individual ones if you'd like, but do you kind of view these as replacing altcoins for that high beta Bitcoin trade?
Probably not. And in fact, I think I've been a little bit of a pessimist with respect to a lot of these Bitcoin treasury companies. I think that they are inevitable, but I think for us as Bitcoiners, we should be hoping for companies with stronger fundamentals to be coming in to the Bitcoin market, right? And I think if we want to get the Amazons and the Microsofts of the world to have their shareholders vote to approve Bitcoin as an investable asset on their balance sheet, doing that through lingerie fighting championships is probably not going to be the best path and solution for achieving that, right? So that's kind of been my point here, is be careful what we wish for as Bitcoiners. And in fact, my general belief has been that a lot of these, I've referred to them as junk companies, junk cos, are posing more of a risk to the adoption of Bitcoin than a benefit, so to speak. And, I'm a huge fan of Michael Saylor and what MicroStrategy and Strategy has accomplished. And I'm hopeful that other Bitcoin treasury companies that have come out over the course of the past 6 months, year, 2 years, that they're going to be successful as well. I want them to succeed. I want to be very clear about that. I would love to have my doubts on this proven to be incorrect. But I'd be lying if I said I wasn't somewhat concerned about it. Because again, I want Googles of the world, the Alphabets, the Metas, the Amazons, the Apples to own Bitcoin on their balance sheet. In fact, I think it's going to happen. I'm pretty damn confident it's going to happen. It's just a matter of when, not if. And so I think if we want to be in a future 5 years from now, where those companies, those, let's call them Fortune 500 companies, are going to be owning Bitcoin, I think that the best way to do that is probably not they're not going to be convinced by the success of lingerie fighting championships, right? I mean, those types of companies are not going to, the shareholders of Microsoft are going to be like, you know what, that company lingerie fighting championships was really successful with their Bitcoin strategy. We should do the same thing. So, right. That's been my doubt about it overall.
Yeah, that's interesting. So yeah, shareholders of these giant tech companies aren't going to look at, what a strategy even did, for example, in your mind and say, we could potentially replicate that.
Well, I would hope that they would, right? But I mean, the fact of the matter is, earlier this year, we had both Amazon and Microsoft have their shareholders vote on whether or not Bitcoin could be an investable asset on their balance sheet. And they both voted no overwhelmingly.
Yeah.
Despite MicroStrategy's success, despite the fact that all of those Mag 7 stocks, maybe except for NVIDIA, but now I can't remember, have underperformed MicroStrategy since Strategy adopted a Bitcoin treasury. So even despite the massive success that's occurred in that one case, the best companies in the world still aren't willing to do it yet. So it's going to take more time. And that's where I do think that, if Bitcoin does go to above 200,000 this cycle, a lot of those companies are going to be just fine, right? The ones that have quote unquote joined the party late here. But there's a risk that doesn't happen. Maybe we quote unquote only get to 150,000, then we go through another 60% drawdown in a new bear market. A lot of those companies are going to be challenged. And in my opinion, it could taint the perspective of Bitcoin on the balance sheet for a lot of these more significant and sizable companies.
Yeah, it's interesting. Kind of contrarian from a lot of the people I've talked to. I mean, I would argue that it is kind of by design, though, because the Mag 7s of the world, they don't need Bitcoin. I think, to me, it makes perfect sense. You would see struggling, failing companies adopt Bitcoin first because they actually need it. Like Saylor was like, we're a low growth business. There's no way to outperform the cost of capital. Like, we'll look at gold, we'll look at fine art, we'll look at real estate, settled on Bitcoin, and then turn the company around. So to me, I'm not necessarily surprised we haven't seen a Mag 7 just yet.
I'm not surprised by that either. And my whole thing is it's coming. It's just a matter of when, not if. My belief has just been that these junk cos adopting a Bitcoin treasury as a Hail Mary kind of last ditch effort is likely extending that timeline further into the future than we would like for it to occur. And I want to push back on something that you said there, because the goal for CEOs and the goal for shareholders is to increase shareholder value. Mm-hmm. And so naturally, aligning with Bitcoin's trend is going to it's going to be accretive for shareholder value, right? We know that for a fact. And so, yes, those companies are growing a lot. Their stock prices represent that growth. Imagine how much better their stock would be performing if they owned some Bitcoin that's up 100% year over year.
Yeah. Yeah, no, you're spot on. Yeah, maybe saying they don't need Bitcoin is a bit of an exaggeration, because, I think Apple sits on, like 40 billion in cash or something. It's like, you want to turn that into some shareholder value, like buy some Bitcoin.
Yeah, it's been a while since I looked at the exact position now, but like, just for example, Alphabet, one of the last times I checked, had $110 billion in cash and equivalents. That's a lot of money that they just basically have sitting on the sideline to fund their share repurchase program or so on and so forth, right? But that would be much better served being invested into Bitcoin. And the fact of the matter is, those companies don't need to do it to save the fundamentals of their business. But if they want to increase shareholder value at a faster pace, or improve the likelihood that they're going to increase shareholder value, doing that through a Bitcoin treasury would make a hell of a lot of sense.
Yeah, no, it absolutely would. That's an interesting perspective. I guess we'll see. To me, I think the more companies adopting Bitcoin and, showing that, hey, like, this can work for any public company, whether you're a strategy, whether you're a GameStop, although they kind of fumbled the bag with their messaging, or you're like a MetaPlanet, you're a dying hotel company in Japan, more companies plugging in and having success, I would think that would sway the Mag 7s of the world to adopt Bitcoin. But I guess I could see where, that doesn't really maybe change their mind, because it's so far removed from their business, a dying hotel franchise versus the Googles of the world.
Right, exactly. And by the way, like, I'm not criticizing these companies for adopting a Bitcoin treasury. They have no other option, as you stated earlier, right? It's basically that last ditch effort, that Hail Mary attempt. They need to do whatever they possibly can to return value and increase value for their shareholders. So the way that they're able to do that with a dying business is to align with Bitcoin's uptrend. It makes perfect sense to me. I'm just saying, if we really want to unlock the $110 billion in cash and equivalents that Google has alone, doing that through Lingerie Fighting Championship or some of these other companies that have popped up over the course of 2025, that's not going to move the needle for the Mag 7 or the Fortune 500s of the world to come in and allocate their capital into Bitcoin.
Yeah, that makes sense. And I guess that's why it's probably important to distinguish Saylor, because from a lot of the other ones, because he's very professional. He can articulate this well. He's demonstrated an interesting value proposition with the preferreds kind of being this like almost Bitcoin financial services company. What are your thoughts on like the idea that each individual capital market needs its own MicroStrategy?
I have no idea, to be honest. I this is going to be one of those super honest moments where it's just like, I have no clue,
Yeah.
I'm not some like financial engineer. So from that perspective, I really have no answer on that. Yeah. But my belief generally is that more of those types of efforts are going to be made, and that we're going to see more companies try to replicate the strategy of strategy, right? That's the blueprint. That's the model that everyone knows has worked, and they're going to try to make it work for themselves. So we're going to see more and more of that continue to pop up. And then we're going to see more of it applied to different assets other than Bitcoin. I mean, we're already seeing it with Tom Lee's Bitmine. We're seeing it with that other company, 8Co, now trading under the ticker symbol ORBS. So we're seeing all these new treasury companies being spun off with different altcoins and so on and so forth. That's even more of a significant risk, in my opinion. Yeah. But for Bitcoin, we're going to continue to see adoption. It's just a matter of when, not if.
Yeah, I definitely agree. The altcoin treasuries are a joke. Bitcoin adoption is going to continue to accelerate. Caleb, this has been a great conversation. I've learned a lot. I always learn a lot from your research. Is there any final words you want to give to the audience, or anywhere you want to send them?
No, man. First of all, thanks for having me. I know this was kind of a last minute thing, but I was super happy to make it work. It's what time is it here? It's 7 p.m. in Montenegro. So I'm going to go out for dinner after this, but I hope everyone enjoyed this. If you kind of like my approach, how I'm talking about markets, this whole entire conversation, just come check me out over on X, just at Caleb Franzen, my first and last name. I'm sharing a lot of free research there, basically giving real-time inputs on what I'm seeing in terms of macro, the stock market, and Bitcoin. And if you like what I'm talking about over there, come sign up for the newsletter. That's free as well. So I'm just trying to add as much value as I possibly can and share some of the expertise that I've gained over the last 11 and 12 years, and hopefully make a difference on other people's approach.
Thank you, Caleb. Really appreciate it. Everyone, go click the links in the description. Check out Caleb's work.